Our bull versus bear stock for the day. Let's pull out the first bull case. Of course, it's an EBITDA beat, PAT beat. I wouldn't really bet my horses on that one. That's the easiest bull case I've had in a while. The bear case, well, PBT is negative. And if that is, of course, it's negative adjusted for other income. So the other income is what's driving the PBT and PAT number, which could well be a bit of a concern. Now, bull case number 2, expect a QOQ improvement in margin in each quarter all through FY26. That was what the guidance was. How much? Non-committal, but a QOQ improvement nonetheless. Now, other income was 241 crore. What you want to see is operating profit positive. So I want to start to look at when does operating income turn positive. Outside of other income, can we have profit after tax only on the operating front? So that's really the question, and that's my bear case. Third one, there's scope for further OPEX optimization, and that is likely to drive margins forward. Mind you, margin guidance is 15 to 20% in the medium term, and that's going to hold the key, frankly, with regard to the re-rating on the stock from here on, because we've seen a very good rally. But the bear case here is operational profitability is still awaited. We want to see that operating profit number come into positive. Maybe a repetitive point, but nonetheless, that is something where we are far away from. We need to wait for that to come. Now, the bull case scope is there credit growth in personal loans is likely to have bottomed. Now we'll start to see credit growth pick up with regard to personal loans, and that is a big positive for Paytm. Could we see that pickup? Well, they were non-committal on the call. They said no visibility of the pickup yet, but yes, the likely bottom has arrived. Mind you, for Paytm, in terms of profitability, loan growth is the key metric to track, because that yields the best profitability in terms of the product mix, and therefore you want to look out for when does credit growth pick up in personal loans. Now, let's talk about the valuations. Currently trading at 96 times 1 year forwards as per Bloomberg estimates. Most market estimates are predicting the valuation at around 35 times FY28 EPS. So they're expecting a very strong tailwind in terms of profitability all the way through FY28. If you're looking at FY28, the 35 times multiple not looking as expensive. But at the same time, the average analyst estimates on Bloomberg see only a 2% upside. We have had a couple of upgrades and therefore looking interesting. We'll have to see maybe over the next couple of days what are the upgrades like. But largely, you're starting to see valuations looking full here.